We're back on the American Dream Business Roundtable with my co-host Greg Noe and our guest tonight, Michael McCormick from Cincy Tax Coach, or MJ McCormick LLC. And we were talking about the subject tonight, and what is that we're discussing?
Well, we'd like to talk a little bit about business metrics and key performance indicators.
Now, what is that?
Well, these are numbers.
Sounds complicated.
It sounds really complicated, but it's really not. If you're in business and you want to know whether you're meeting your objectives, you need to follow some metric, and every business will follow sales, will also follow profit. But depending upon your business, there might be many other things that we would want to track to see whether what we're doing is working.
Well, there's the famous quote is, if it gets tracked, if it gets measured, it gets watched,
right.
It improves. That's where performance indicators come from. It's obviously we want to know what our sales are compared to last week or last month or last year, but it's also depending on your business, you can drill down and get more fine-tuned on specific indicators of success or failure. A real estate agent might be tracking not just their gross sales, but also their marketing costs as a percentage of their sales, so they can determine, are they spending more money on advertising and marketing than they did in previous years to generate the same amount or less revenue or more revenue.
Yeah.
Well, and let me give some other examples. The one that I use in my text is Amazon, for example. They would like to know the size of the orders the average size of orders that are being taken through their system. And of course, as that size of the order grows, that means more to them in terms of their bottom line. They're making more money, their sales are going up. On the other hand, a business like Huffington Post, which is a newspaper, they don't even have a basket of goods to sell, so they're not interested in that at all. They are interested, however, in open rates, because they're sending out newsletters. Right. And the more people that open that newsletter means more advertisers will be interested in advertising in the Huffington Post.
Well, let me ask that question right there.
And that goes to the bottom line.
Well, let me ask that question right there, because they do advertising. And so wouldn't you use metrics for the advertising part of it too?
Absolutely, yeah. It's going to, which metric you design is based on your specific business. So the example Greg's giving with Huffington is they want to know how many impressions they're able to provide their customer.
Like on website.
On opens,
Right.
on click-throughs,
Right.
on all those things, so that they can provide that data to their customer, because it's valuable to the customer to know,
right.
if I buy your time, if I buy your service, how likely is it that my product is going to be seen?
Well, let's compare that to an accounting firm who sends out a newsletter once a month. And granted, there's some number of people that open that newsletter and read it, but it really doesn't have any connection to my bottom line.
Right.
So granted, I would like more people to open it, and I'd like to track that over time, and this would be classed as a metric, something that we would track, but it doesn't reach the level of a key performance indicator, because it is not directly related to profit or bottom line. Right. So that's the only difference between metrics and key performance indicators. And as we said, the nature of the business is one key component to that. Another key component to what indicators you might use are the stage you are at in your business. Sure. If you haven't started yet, tracking sales is kind of meaningless. You haven't done anything yet.
You can only benchmark it against what your projections were.
Well, let me ask this question. So would you look at it after 6 months, a year, 3 months, what?
I would say it depends on the metric.
Okay.
Because if you think of FedEx or UPS,
right.
as packages are coming through their systems, they're watching for on-time delivery. What percentage of their packages are delivered on time every day?
Right.
How many packages are routed to the wrong address every day?
Because that has a cost.
It has a
It
cost.
has some connection to their reputation,
That's right.
which connects to their bottom
profit.
line.
That's right.
What about car dealers?
Sales during the week. It could be how many people came onto the lot.
Or online, because
Or
everything,
online,
a lot of things
yeah.
are online
That's
right
right.
now.
Well, you might also want to track, and they may not be key performance indicators, but you might want to track what days of the week do you primarily sell
More
your
cars.
vehicles.
That's right.
The other thing, you might want to track these key performance indicators. They cut across the entire company, but they might be departments as well as individuals. So you might want to track individual closing rates.
Well, I was thinking about different types of vehicles. You know, we know Ford trucks sell better than GM trucks because somebody's tracking it.
That's right.
But in the case of the salesperson, I mean, let's say that he has a particular closing rate. 50% of the time he closes the deals once he sits down with the people. Well, maybe if we sent him to a seminar, for example, and increased his closing skills, we'll call them, and now he can close 3/4 of the people that he sits across the table from. Wow, that will really help the bottom line, and these are the kinds of things we want to track to see whether that seminar really worked.
Right.
And so we might try various seminars. This one did a really good job. That one did nothing whatsoever. It was a waste of money, and on and on and on. So that's the real value in having these metrics and these key performance indicators. They tell us whether we're meeting our objectives, we're wasting our money, all those kinds of things, wrapped into one simple number that you can look at and track over time.
Let me ask this really fast question. Let's look at my business, for instance, because I'm a one-person operation, but I have consultants that work for me. And in the next few years, we should be making different income. So I should put a metric system in to track those, because I have different things. I have a referral organization, I have clients, I have advertisers that are straight advertisers, so I have different things going on all the time.
I would think each of those would potentially be an indicator.
Okay.
What are your 5 sources of income or revenue?
Right.
And who is driving each one of those, or is it multiple people that are, or multiple groups that are driving each of those sources of revenue? Those are things you would probably want to know. Do you need to spend more time with any individual group to improve that?
Well, let's just take one for a moment, and let's say that your networking group, Bright Connections. The sales on that is comprised of 2 variables: the number of people that are in that group and the price. Well, those might change over time. You might want to break those down into their components by, for example, tracking the number of people in the group.
Right.
And see how that goes over time.
I think you should give the websites, you guys, and you need to take a break, right?
Yes, we do need to take a break. If anyone would like to get in touch with me, you can find me at greg@edgarallengroup.com. That's EDGARALLEN group.com.
My email address is mike@cincytaxcoach.com, and the website is the same, cincytaxcoach.com.
And go to my website, which is my brand, KathrynRaaker.com. And right after these messages, we'll be right back on
The American Dream Business Roundtable.